And good evening, volatility lovers. Welcome to tonight's episode of Moffat on Money. Uh, I'm Clay, joined by the ever lovely, ever gracious Etrain. So good to
Hi
see y'all.
there.
Good to be with y'all tonight. Hope you've all had a good week so far. It's been a little bit cooler for us. Had a big cold front, some rain blow through, but looks like from here on out we are going to be, in the 70s and enjoying what spring ought to be. So I noticed some people up north are getting snow. Jane, I don't know if you're on yet or not, but every time I see something like that, I think of you. So hope you're staying warm. Um, Tonight's episode is on I Love Volatility, which is kind of a geeky, nerdy title, I think, in some ways. Most people don't think of volatility, particularly as it impacts their investments, much less their daily life or their future, probably would be a better, more apt description. It can be a kind of a confusing topic, and Etrain and I will tonight try to guide you through the chaos. And we
Hi,
are happy to be
Melissa.
here. Hello, Melissa. Happy Passover to you as well. I don't celebrate it, but I will cheer it. How's that? So
That
happy
works.
Passover to you. Um, oh crap! I forgot something.
What?
Ah. All right, you talk for a minute. I'm busy.
I'm on a lag apparently, so I don't know if you're going to hear me until like 20 seconds later. Um, so what's up? I've had a busy freaking week. I don't know about you guys. Um, I hate being put on the spot like this. The
But
Masters
it's
is
good
in
for
town.
you.
The Masters, of course, is somewhat close to where I am located, so it's been crazy around here as well. And the prices of greens fees have tripled the past week, which is interesting. I guess they're trying to take advantage of all the golfers around. And
I
so
didn't think they
far,
allowed
Rory,
people own.
not on um oh my god, what in Augusta, that course, but the ones that all the courses in the state are super high right now. But yeah, that's pretty much all I got. I was watching some of the hearings, catching up on those. There've been a bunch this week, and it's the same old drama, the drama llama fest, and depressing. There she is.
All
Happy
right.
Saturday, Jane. Clay was just talking about you and the weather. He heard that it was snowing up north. He said he always thinks of you when it's cold and snowy up north.
All right, I'm back.
Okay, good. Thank God. Thanks for rescuing me from that very uncomfortable minute and a
Sorry about
half.
that. Um,
Cold, gloomy, and rainy.
yeah, E Train needs to get fired up about something, and then she'll let it rip. But just catching her off guard there, we
It's
got to work
very,
on that.
yeah, yeah. That's not
Now
not how I do things.
the cool thing that I thought of that I wanted to have ready and I forgot to was that E-Train is a celebrity
Huh?
because
Oh,
Here she is at a Charlie Kirk rally. That is our
that would be
very own
me.
Etrain. So she is a modest fan of Charlie. Had a chance to go hear him, and so took a road trip and went and heard him. So
The funny thing to me
that
about
was
that picture is everybody's face, the expression is a little
yeah.
skeptical. Like,
I don't know
huh?
what was being said or who was talking. Look at Charlie's
So it
face.
was, yeah,
Charlie's
we're
like,
all like had the
what the
same,
hell?
like, what the, huh? Yeah, I mean, every single person back there. Oh,
Yeah, and
that
you
sweet girl. I gave her
look
a
mad.
poncho. She was like drowning, and I think this is when his bodyguard offered me a poncho, and I was like, dude, it's too hot. And I said, but this girl back here needs one. Not that bodyguard or that one, but there's another guy that was standing right here. Oh, here we go. Jane, I have 100 bags
So
of
that
mulch
was
I can't put down because of the rain.
100 bags of mulch. That's a solid amount of mulch. Not going to lie. Good effort there.
I hope you can find someone in
So,
your household to help
all
you with
right.
that.
Well, we're in the not going to touch that one.
You shouldn't.
So we are in the presence of a celebrity.
Yes, you
I just
do.
thought everybody'd want to know.
Yes. Oh, stop it. However, Clay, I was
Helen
wearing
can tell you
you can see it. My signed Charlie Kirk hat. There it is. That's his. This is one of the ones that he signed on election night.
I remember when I first saw that, at first I thought it was Trump's signature, and then I recognized it wasn't Trump's. I couldn't figure out who the hell's signature it was.
It was Charlie.
But hope it was a good day, and I think you had fun. Hope you did.
It was a very rainy day, and it was after getting away from all those people because they were like sardines. After like it broke because there's going to be lightning, it got really cold. It was like, holy crap. All that body heat was crazy.
Yeah, it has really cooled down the whole South, not going to lie.
Mm-hmm.
But hopefully this is we usually have one cold snap in April. This is the cold snap, and it got down to 60, 50.
Mm-hmm.
That's not horrible. I'll take it. I was in Birmingham, I don't know, in 92, 93, and we had like 11 inches of snow on April the 15th. I remember it because it was tax day. And I mean, it was a blast. We had 3, 4, 5 foot drifts. Obviously everything shut down. And Casey was, 4 or 5. So we played in the snow the whole time with a bunch of other kids. It was fun. Anyway, tonight, I love volatility. So let's take a look and hope by the end of the evening that you too will love volatility. Now, the object of our adoration and affection, which
is that VIX?
if you got to love an object, this is as good as any. That is VIX, the volatility index. This is a chart that I guess I would, if I had to describe it, I would say it looks like it's had one too many espressos. It's got peaks, it's got valleys. It is just a chart of pure energy. Now, I'm a guy, I love pictures. I love charts. The reason is because a lot of people don't like them, but you should, because they contain a lot of information. And if you take a few minutes and study them and consider them, there's a lot to be learned. Now, this volatility index, okay, I've got a little bit of a medical background. It looks more like a bad EKG of a pulsing heartbeat. So this could be a glimpse into true love. Y'all watch The Princess Diaries?
Diaries?
Something like, anyway.
The Princess Bride.
What was the name of Princess Bride? Okay, sorry. Movies aren't my strong suite. But, I see that and I go, who says finance isn't romantic? This is just the thing that will inspire generations. So we'll describe what volatility is, what it means, offer some insight, stories, and maybe a playbook to help you better accommodate chaos in your portfolio. And that's really what volatility reflects, is chaos in the market. Now, if you're new, this show is really more directed toward newer investors or investors without a great deal of technical knowledge. But even if you have some background in trade, maybe there'll be some things tonight which will be beneficial to you. Because a lot of this is very applicable, even if you're juggling ETFs or options. VIX is important, and very, very few people pay attention to it. So either way, whether you're the newbie or experienced, you're our people.
And if you haven't heard,
try to communicate tonight, hopefully, is that volatility is not a monster.
Sorry, Clay and I are a little bit off because, as you guys know, my internet is jacked in the middle of nowhere right now. But anyway, I have mentioned several times on this channel that VIX is the first thing that I look at. It's at the very top of my stocks on my phone. And if VIX is way up, I just close the app. I'm like, I don't even want to look at it, because that usually means that the things that I want to be up are not up. They're probably down, and down a lot.
Yep. And a lot of people look at VIX like that. I look at it and get kind of happy. Once you understand it, it can be your ticket to the chocolate factory. It can be your golden ticket. Which makes me think, should we add Willy Wonka to the movie list?
Mm-hmm.
Should we add Willy Wonka to the movie list?
Absolutely.
Maybe not. I saw it. I've seen it a couple times. No. Anyway, we're going to be digging, shaking the markets in this April of 2025. Whether it's the dollar, bonds, or stocks, all of them are doing some serious acrobatics. We'll trace volatility's history, weigh the pros and cons, check out maybe how long these times can last, and maybe share some stories who've turned the market mayhem into millions. Hopefully by the end, you'll have fallen in love with volatility as well. So let's begin with, what is volatility?
Melissa.
Volatility is the best way to think about it. It's like the market. Do what?
Melissa.
Melissa is our movie aficionado. She would have us. Would it be a misstatement to say you would have us cover Jurassic Park every movie night?
That is not a misstatement.
I think it's modestly accurate. Melissa loves movies, loves dinosaurs. Dinosaurs are like number 2 behind pugs. So, all right, what is volatility? Volatility, I guess, can best be described as a quantitative measure of the market's mood swings. Sometimes it's pretty chill, kind of laid back, just kind of hanging around. Sometimes it's throwing a full-on tantrum. Technically, volatility is a measure of how much the stock price moves around, how much the price jumps over time, how much it varies. It mathematically is a function of variance, the statistical quality variance. Think of it as a difference between a lazy river and a whitewater rapid. Low volatility, prices barely budge. Like a stock stuck at $50 for a week, or the market slowly moving up over time. Volatility is very low. High volatility, that stock is zipping from $60 to $40 in a day. Now, thing about volatility is it goes up when the market goes down. And some people have kind of trouble thinking about that or understanding why that is, but it's really pretty simple. The idea is that when people are buying stocks, everything, they're putting in a fixed amount a month or a little bit on occasion or whatever. No real urgency to it per se on average. But when the market starts going down, people get concerned. And if it goes down, 5-6%, they start getting a little worried. They may start to sell. Well, that drives the market down a little further. Others see that and they start to get really concerned. They put in sell orders. And it just builds on itself so that fear drives rapid decreases in the market. Now, the market generally goes up slowly over time, but it decreases rapidly, usually.
Clay, whenever you get...
And that's what VIX measures. Yeah.
Hi, you can hear me? Okay. Because I asked Grok about some of this today, and he said the VIX was based solely on the S&P. Is that true?
No.
I didn't think so.
The VIX calculation is actually on the prices of 8 options, which admittedly sounds kind of small, but it actually ends up being a pretty good indicator. They have, 2 options out of the money, 2 options in the money, 4 at the money. So it's looking at the movement technically in options, but that ends up being pretty reflective of what's going on in the market as a whole. So those options are on stocks in the S&P 500. So Grok isn't wholly wrong, and most people think of VIX as a measure of volatility in the S&P, which it indirectly is, but precisely not, if that makes sense.
Sorta.
So, but it's the best, it's the most standard, it's the most widely accepted volatility index that we've got. There are several others, but VIX is what everybody uses and relies on. Now, the idea of VIX is it measures standard deviation, variance, which is a measure of how far prices move from their average. But you really don't need a math degree to get it. You just understand that VIX is a measure of volatility, and most people would say a measure of panic, of mayhem. A lot of people, news pundits, will even call VIX the fear index.
Can you define volatility generally, not market wise, because I can say like a relationship is volatile.
Yeah, volatility is a statistical. Volatility is standard deviation.
Which
So
means
standard
it's
deviation is
all over the
basically
place.
the well, if you've got an average price, a horizontal line that's an average price. If the price just kind of bounces around that average slowly, the standard deviation is very low.
Even if it
But
goes
when it
up or
jumps
down.
up higher or drops lower, that standard deviation increases. And that's what VIX is capturing
So, like, if we're talking about
on a
a
day-to-day
relationship,
basis.
if we're talking about like a
On a
relationship.
day-to-day basis.
Hello? Can you I know it's weird.
Yeah.
We had this weird okay. So like in a relationship, I'm not talking about anything in specific, just I know people who have volatile relationships, which means like they're fine and then it's like everything goes to shit or everything is great and then it's like fine again, kind of mediocre and then it just, they're getting a divorce and then it, you know, goes back up to normal and it's volatile, right?
Yes.
Just for those who don't have a
And that's kind of
market.
the same idea with the VIX. Yeah. Now, keep in mind, um, when the VIX is low, say around, 15, markets are very calm. When it spikes to 30, 40, 50, like it is now, it's about 37 currently. Traders oftentimes are sweating bullets, particularly if they have highly leveraged positions. A lot of hedge fund managers, traders will take a dollar that's invested and borrow against it 20 to 1, 30 to 1, 50 to 1. And so for every dollar you put in, you're actually investing $51. Well, the benefit to that is if there's a small gain, it magnifies your gain by 50 times. The flip side is if it starts losing, your losses are magnified by 50 times, whatever your leverage is. And so that's one reason why we have seen some of these sharp dumps in these past several weeks, because the market starts dropping and people with these leveraged positions have to close them out in a hurry. That just compounds the drop. Because they're selling more and more of their shares. Now, keep in mind, this index normally is around 18 to 22 in a healthy market. And right now, like I say, it's 37. So that gives you a little bit of an idea how much more movement we've seen in the market than normal. Now, volatility is not new. It's been around since markets were born. Imagine Dutch traders in the 1600s who freaked out when tulip bulbs crashed from the price of a house to a sack of onions. It's called tulip mania. And that was volatility before anyone had a name for it.
Is that a
It
real
occurred when a
thing?
highly fashionable industry, tulips, pardon?
Was that a real thing?
Yes, it's a real thing.
Hmm.
Tulip mania, 1600s in the Netherlands. Seriously, some of these tulip bulbs that had multiple colors, like red and white stripes, were selling for the price of a house. They were taking an average of 10 times the wages of an average worker. So gives you an idea of volatility, I guess. Now, in trying to you know, promote, I guess I should say, the sale and the stability of the tulip bulbs, the government banned short selling in the futures market for tulips. Now, short selling is selling a stock or an asset that you don't have. You can do that in futures and stocks. You do it basically by borrowing the asset, selling it, and you owe that asset to somebody else, which you have to at some point go out and buy to repay that loan. So if I don't own Apple and I want to sell it short, I can contact my broker, sell Apple 100 shares. And then hopefully over the next few weeks, Apple's drops in prices, at which time I can go back in the market, buy those shares, and pay off the loan of the shares that originated the trade. So I sold it at a higher price. I buy it at a lower price. That's selling short. And you can do that on the futures market as well. So the Dutch had a futures market in tulips, because you could only get the tulips during one season. I forget, is it winter or spring? But people would want to go ahead and put in orders. So they would order months in advance for these bulbs. Now, isn't it interesting? I find it kind of interesting anyway, how over and over and over again that the government when the market has tremendous problems, that the government was involved in setting up the circumstances that led to it. The major acceleration with tulip mania began in the 1630s, 1634. And kept blowing up, getting more and more expensive until it collapsed in 3 years later in 1637. It is generally considered to have been the first recorded speculative bubble. And a bubble is just where asset prices just get stupid expensive. Kind of like housing is done, kind of like stocks were a couple months ago. So remember my adage, stupid should hurt. This is just another example, the multitudinous examples in market history of stupid should hurt. Now, why should you care? Simply because volatility is where the action is. High volatility means high risk. Well, where there's high risk, there can also be big rewards. If you buy a stock at 50, it rockets to 75 in a day, that's volatility working for you. But if it tanks to 25, well, that's the flip side. Now, that volatility is 37, way above its usual 20-ish average. So that tells us that markets are nervous. Think of it as kind of like the market has a case of jitters. That's what the VIX reflects. And that's why it's called the fear index. Now, volatility's got a long rap sheet. It's longer than a CVS receipt. And this is just a listing of some of the few examples. So you've got a scroll of examples stretching from the 1600s tulip mania to the current issue, quote unquote, tariffs. Now, I mean, people were paying fortunes for a tulip until the bubble burst. Prices crashed, folks lost everything, and the world had its first taste of market madness. Now, that's volatility's origin story, one of human greed and panic in full color. You can fast forward to, let's say, 1930, the Great Crash, the Great Depression. Stocks plummeted 90% over a few years. The downward trend was over years. The Dow didn't really recover for decades. And this wasn't just a blip. It rewrote how we think about markets and risk. At this point in time, regulators stepped in. The SEC was born to keep things from going, full Wild West again. And volatility became a thing to measure, not just fear. 1987, we hit Black Monday when the Dow dropped 22% in one day. Keep in mind, people were dying because the Dow dropped 5% in one day. Imagine if it dropped 22% in one day. Well, that happened in 1987. Imagine checking your portfolio and losing a fifth of it before dinner. 2008, the global financial crisis, the subprime crisis. I mean, we had banks collapsing, Lehman Brothers, several major brokers went kaput. The VIX shot up to 80, more than twice what it is now. And that's kind of when volatility went mainstream. Every news channel was flashing panic. Go on a few years more, COVID hit. Markets did a belly flop. VIX spiked to 82 in March of 20. Stocks cratered 30% in a few weeks. But here's the kicker. Stocks bounced back pretty fast, doubling by 2021. That is where the opportunity is. That is why you will learn to love VIX. The stupid, the greedy get humbled. You, as a smart investor, you get opportunity. I always say stupid should hurt. Well, when it does, take advantage of it. Now, in 2025, a lot of people will blame tariffs. We've talked about that before. The market was already highly overpriced by most any reasonable metric. But everybody's focused on the tariffs, which, came as a pretty big surprise. The thing is, a great deal of the risk in the markets was due to this very high leverage that I've talked about. High leverage in certain positions. You've got leverage in other that maybe is not as high in the basis trade, but it has ticked off a number of consequences that aren't really directly related to tariffs or the cost of imported goods. So the amount of panic, the volatility levels we've seen are not at anywhere near 2008 level panic, but it's pretty spicy. It's a fairly high rate. Now, volatility is involved with every crash. Better tech, faster trading, smarter tools, options, ETFs, all contribute to a sharp rise in volatility. Now, the history says volatility is not going away, but it certainly is getting more interesting because it still provides opportunities. One other thing that I want you to note before we leave this page, from 1637 to 1720 was 80 years, 83 years, to 1837 was 117 years, to 1873, 50 years, 1893, 20 years, 1930, 40 years, 87, 50 years, 99, 11 years, 2001, 2 years, 2008, 6 years, 2020, 12 years, 25, 5 years. You'll notice over time, it's not a perfectly linear scale, but over time, these events are becoming more frequent. Word to the wise. So let's zoom in to this month, past month. The markets are kind of like a 3-ring circus. And three main asset categories are stealing the show. You've got the dollar, you've got bonds, you've got stocks. Most people see the headlines on stocks, but the other two are actually more important in terms of shaping stocks' reaction. Stocks generally are reacting to changes in those two. Now, the dollar's dimming has become weaker, which is not necessarily all bad. Bonds are flickering. Remember the teeter-totter. As bond prices drop, rates go up. Well, bond prices have been dropping, and stocks are pulsing like they can't decide whether they want to party like it's 1999 or whether they're just in sheer panic and terror. So let's take a look at the dollar first. It's been on a slide, hitting 6-month lows against the euro and the yen. Why? Well, Trump's tariff talk is a central focus, and markets are betting or were betting on trade wars. You'll see a lot of posts on X, for example, saying the dollar's getting hammered, tariffs scare off investors, something along those lines. Well, one point to keep in mind is that, yes, the dollar is weakening, but a weaker dollar is great if you're exporting widgets from Ohio. But if you're planning a Paris vacation, your bucks won't go as far. So if you're exporting, it makes your products more competitive, lets you sell more overseas. If you're traveling, it makes it more expensive. Now, some of you may remember last week I said there was a record number of Americans by the end of 2024 that were hitting up food banks for food they were having trouble affording. While at the same time, there was a record number of Americans visiting Europe. Here's the grind. The more competitive American products are overseas, the more jobs in manufacturing and procuring the raw materials that there will be in America. It also will be more expensive for the wealthier to travel. So which do you choose? For investors, a shaky dollar messes with, internet value of international stocks and commodities priced in dollars like oil. But, you hear a lot of talk about Trump trying to improve the stature or status, the wealth of middle America versus the rich, versus Wall Street, Main Street versus Wall Street. Well, this is exactly that point, is that this benefits job opportunities, increases job opportunities for middle America. For those people who are traveling overseas, enjoying the good life, it makes it a little more expensive for them. Pick your poison. Now, on the dollar, just to give you a little context, this top graph is of the last 2 months. And it looks like the dollar is being absolutely destroyed. And if you read the headlines in the press, that's what you hear. Dollar's down 8.5%. That sounds horrible. Now look at the bottom one. This one goes back to 2000. Had to cut it off a little bit here to make them bigger, but as you can tell, it is still above its 25-year average. The dollar is still relatively strong. Again, does this look like a apocalyptic collapse or crisis? Is there anything in this picture that makes you think this is really abnormal? I think most people just looking at the picture would probably say no. Context matters. Context is everything. It is today in our media and even among our politicians often, it's all about the narrative, not the facts. That's a big difference. Bonds. Now here's a graph on bonds over the last 2 years. See anything that looks really scary to you? You've got this drop here, but is it, a lot different than here or here or here or here or here? Probably not. So one would think, meh, what's all the hype about? Again, context is everything. Over a longer time frame, this is not a unique situation. But I'm not going to lie. Over the past week or two, the treasury yields have done like the cha-cha. 10-year yields are up around 4.5% after hitting 3.98 a week ago, 2 weeks ago. That's a rapid move. That's a lot of bounce. And
Can
the
you hear me
Fed
now?
has been. Yes, Ken, welcome back.
Thank God. Okay. Is the
Hope
delay as
that's better.
bad?
Your internet's feeling better.
You and me
No, I
both.
don't think so. Not so far.
Delay is
Good Lord willing, water
worse.
don't rise.
The delay
Pardon?
is same. The delay is the same.
No, delay's much shorter. Much
Good.
better.
Okay. Good.
You're almost in real time. You've still got a couple second delay, I believe, but you're a whole lot closer.
Thank God.
Okay. Let's see. Bonds. Now,
Meh.
the Fed. The Fed has been cagey about rate cuts. You've had a lot of fears about tariffs. It isn't helping. One thing I wanted to talk about tonight, I even kind of advertised it on X earlier this morning, would talk about China, what's going on in China, and quite possibly Japan. I've decided not to put a lot of detail about that because that deserves basically a whole show on its own. So I will cover that Tuesday night. But if China and Japan are dumping treasuries, selling treasuries in order to support their currency from collapsing, they sell the treasuries, they receive dollars. They then take dollars and go out and buy their currency. So that increases the supply of dollars relative to their currency and will strengthen their currency. It's basically a supply and demand function.
So how does that
So if
affect the
they're
dollar,
dumping
though?
treasuries and trying to defend their currency, it makes the dollar weaker against those currencies.
Don't you think they're doing that
But like I
now
say,
as
that's
a? Don't you think China's doing that now just to get back at us on the tariffs?
no, I think they're trying to save
No.
their ass.
Okay.
And that's why I wanted to do a whole show on it. Because there's a lot that I really can't explain in short order and do it any kind of justice. So Tuesday night I will cover that in some detail. Now, Japan, there's rumors of a large bank on the verge of collapse. The yen has been getting weaker. If it gets weak, that increases inflation in Japan. That forces the Bank of Japan to have to raise their interest rates, which probably will make this bank collapse, and two, cost the government a hell of a lot more money in interest because their government has twice the amount of interest of debt that our government has. And we're crazy high with debt. But they're really in a trap. It's going to break. That dam's going to break sooner or later. I don't know when, but they're really in a pretty tight strait. So the bank is trying to buy the yen to keep it from weakening to where they have to increase interest rates. So we'll cover that more Tuesday night. So now remember the teeter-totter. When bond prices drop, remember, if you're selling an asset, if you're selling a lot of an asset, the supply increases, its availability increases. So that causes the price to drop. Well, bonds teeter-totter. If the bond prices drop, interest rates go up. And so when you see interest rates on the 10-year treasury drop, 10-year treasury increase 50, 60 basis points in a week, you know there's some significant selling of treasuries going on. And a lot of it, I think, is the central banks. A lot of it is people trying to close out some of these leverage positions, like in a basis trade. Basis trade. That probably doesn't ring a bell either, does it? Basis trade is where bond traders will exploit a difference. It's arbitrage, form of arbitrage. They will exploit a difference in value between the bond futures and the actual current bond price. They basically will sell the future, buy the bond, and they'll finance the bond through repos. They then take that bond and lend it out, and they pay this interest rate, the repo rate, on the money they borrowed to buy the bond. But since they own the bond, they also receive that interest. So the interest that they're receiving is positive carry. The interest they're receiving is greater than the interest they pay. A few basis points. So they lock in a gain, a couple of basis points. Remember, a basis point is 1% of 1%. But if you're talking a $100 million position, a $200 million position, that's $10,000, $20,000, $30,000, $40,000 in interest a year on that one position, free money. Well, some of them also leverage. They will, pledge other assets and borrow more money to increase this position. Anyway, when there's turmoil in the markets, these positions become riskier, so they start closing them out. So they pay off the loan, sell the bond to pay off the loan, and close out the position. So the terminating of the basis trade is also probably a decent contributor to the rapid amount of sales, the increase in the amount of sales, the rapid decline in rates over the past few weeks. Does that make some sense?
I'm losing you every
Etrain,
now
can
and
you hear
then,
me?
so I don't. I'm losing bits of it every now and then. I
Sorry.
think Jane's going to pop on to help because I can't.
Okay. Well, if something I said to y'all doesn't make sense, then ask a question or post it on X, Rumble, or YouTube. We will. I'll try to clear it up, but I hope that makes some decent sense as to why so many bonds are selling. Now, volatility is testing a lot of people's nerves, and this rapid decline makes people think bonds aren't safe. But it's all about maturity. The bonds with this rapid decrease in price are 5-year, 10-year, 20-year, 30-year bonds. But like my portfolio, I'm in short-term treasuries. I'm in 1 month, 3-month treasuries. And they don't really get impacted by this kind of volatility or risk. In 1 month, I'm going to have 100% of my investment plus the interest. In 3 months, I'm going to have 100% of my investment plus the interest. So the risk really is a function of maturity. T-bills are still relatively safe if you're staying short. So if you're concerned about risk, you want to stay short. Now, I explained shorting a few minutes ago. And just to give you an idea of that, remember last week when the Dow went up 2,900 points, one of the largest increases in a day in the Dow in history? It wasn't because there was necessarily any news coming out that the situation in the world had changed. A lot of it was technical. Now, some people think it's because Trump issued a 90-day moratorium. That didn't hurt. That kicked it off. So you could expect a good day. But what really blew it up, particularly near the close, was you started seeing a lot of these short positions closing because they were going to lose their ass. Remember, a short position, you borrow the stock, you sell it now at a high price, and the goal is to buy it later at a low price. So you're still buying low, selling high. You're just doing it in reverse order. Well, when the market starts jumping sharply, these short positions lose money, and particularly if they're leveraged, they lose big. So you saw a lot of people closing out those contracts by the end of the day. Nothing, really in the world changed dramatically, but that's why it jumped so much. The next day, it drops 1,000 points, and that's volatility, just working for some against others. Now, let's take a look at the third leg, which are stocks. The S&P 500 has been a drama queen. It's up 5% in 1 week, down 3% the next. And Melissa, do you like my pick? Is that a good pick to use? I don't even know the movie, but anyway, I just saw the title. Tariff threats are really kind of the big question mark. Nobody knows how much they'll hit profits. You've got, the issue. Why does this matter? Well, volatility in these assets create deals and traps. Now, whoops, are we okay? I just saw things flash. The dollar's dip could signal bargains, or an exports volatility might mean a chance to lock in higher yields. Stocks, well, when you can buy blue chip stocks at clearance prices, but only if you're quick. This is 2025's playground, and we're just getting started. So let's talk about why volatility is a gift for some and a curse from others. And this
Melissa.
is, I guess my inner nerd coming out, but I love volatility's upside. Melissa. Oh, I'm not sure where that's from. I presumed it was some movie or series. I obviously am not well versed in either of those areas.
Well, it's weird because
I saw it and just thought that was apropos as hell.
The reflection is not the same as what's above, which is, I don't know. I have to look it up.
No, and the dude is wearing a suit. Everybody else is in Renaissance garb.
Except for the reflection.
Don't know. I may have, yeah, the reflection is modern. But, even in the upright picture, the dude's in a nice suit, which wasn't standard issue in the 1700s.
Melissa says, anyway, you're good. I think the flashes.
So I love volatility's upside.
Hi. I think the flashes are from me and my issues here. But Melissa, God knows, Jane's coming on short.
Okay, no problem. I look at volatility as an opportunity to have a treasure hunt. Volatility for days just screams potential. Volatility is actually a good wingman. Um, First, there's bargain hunting. When stocks tank, great companies go on sale. Look at this month. S&P dipped 3% last week, and names like Apple and Microsoft are at 3-month lows. Now, imagine being able to buy a $1,000 stock for $800. Volatility is basically your discount code. Now, I've been pointing out the market's been overvalued for months. A 20% decline brings opportunity into focus. So when the market is hurting, well, it's kind of like a mating call for investors, for smart investors. The more pain the market is in, well, the greater your adoration of volatility is. I think Jane's having some problems. Melissa, it looks like it's a mini series with 9 out of 10 stars. Jane, I hope Ellen is working on that. We'll see soon. And then Melissa, Marie time travels to 2024 reincarnated as Antonia, married to her lover. With a second chance, she aims to make the marriage work. Interesting. 9 out of 10 stars, may be worth a watch. I don't know. If you like drama, that may be the thing to watch. Now, so pain in the market is opportunity. Volatility, now if you do options, which if you're a beginner, you probably shouldn't, but there's opportunity in options trading. Volatility is rocket fuel for options. When the VIX is high, like, about 35, 37 now, option premiums skyrocket. Now an option is simply a bet on the direction of the market. I buy an option on this stock price, like Tesla. If I buy one type of option, I'm betting the price goes up within this time frame. If I buy another type of option, I'm betting the price goes down in this type of option. So they're simply bets on the direction of a stock, the direction and extent of a movement in a stock's price. They're tricky, but volatility makes them juicy as hell. Remember when Trump tweeted, "It's a good day to buy"? There were a few people, very few, who bought ODTE options, OT0DTE options. 0 days till expiration. So you buy them that morning, they expire that evening at the close of the market. If you bought it right after Trump said it's a good day to buy on the S&P, you made about 1,600% in a day. 1,600% in a day. Does that make you feel greedy? Now, just remember, if you make a wrong call on those, you have zero. You lost everything. That's the beauty of risk and return. Now, with volatility is where sharp investors can stand out. If you spot a sector of the economy that you like renewables getting unfairly crushed by tariff fears, you can load up on it before it rebounds. If you're a beginning investor, this basically means picking a few stocks you believe in, not just dumping cash in the S&P 500, which, is a safe strategy and generally does better than, most mutual fund managers. But as I've said before, if you want to make money in stocks, it's not really about being a bull or a bear. It's about being a pig. Now, there's an old cliche, bulls make money, bears make money, pigs get slaughtered. And yes, there is such a thing as getting absolutely stupid greedy and thinking your stock will always go up. Investors have to remember there is no such thing as a bad gain. You know, some of my greatest regrets were not taking some gains on investments when I had a great chance. You always have to maintain perspective. But if you want to acquire wealth in the markets, you pick good stocks and buy. If they go down, you you still believe it's a good stock, you buy more. Most of you probably are not familiar with a guy by the name of Peter Lynch. He was the manager of Magellan Fund in the 70s and 80s. One of the best stock pickers in modern times. And his strategy was really relatively simple. I remember him recounting a story where he saw Taco Bell. It was a profitable company, never lost money, had no debt, and was generating cash. And it was about, I think, had been $25 per share. Well, the market dropped and it dropped down to something like $7. So he started buying it around $7. It kept dropping down to $1. What'd Lynch do? He kept buying it. He bought more shares at $1. He was still buying it. Well, shortly thereafter, Pepsi came into the scene and offered to buy it out. Some negotiating, some other companies, whatever, ended up closing the deal at $40 a share. There's a moral there. Lynch didn't worry about diversifying. He focused on a company that produced cash at low risk. He bought it cheap. That's what volatility offers you and what makes it so damn sexy. Volatility hurts all stocks. So even the good ones will get dropped. Makes them cheaper. In 2020, when COVID crushed the markets, people who bought Zoom or Shopify or Amazon saw, 4 times returns in a year. Today, with stocks wobbling, the same chance is knocking at your door. But, and it's a big but, it's not all roses. Let's flip the coin and talk about risk, because not everybody wins on every trade. Volatility can be a gut punch. If you invest, you'll have bad days. Volatility's got traps, and I'd be pretty much a lousy investor if I didn't recognize them or flag them. So what do you watch for? First of all, hello, Jane. Good to see you.
Hi, it was
Appreciate
being
you jumping on. Glad you got that worked out.
No problem. StreamYard was just not cooperating.
StreamYard sometimes is like just a stubborn mule. It just doesn't want to cooperate.
It said that I didn't have an account. I'm like, well, I've logged in before, so I don't know what was going on. So Ellen deleted it and put it back in. So I think we're good now.
All right. Yeah, I noticed Ellen hadn't joined us back again. She's just having a fit with her internet.
I did until I had a commercial line run to the house.
All right. Yeah, they're working on that.
You have to pay.
The 2025 stocks in certain sectors like tech and retail chains have been tanking, been hammered. If you try to buy them too early, you're underwater. That's why you don't bet your rent money. That's a risk of, buying in a falling market, is picking the perfect time to buy. You basically have to get comfortable with the idea you won't pick the perfect time to buy.
That's correct.
That's why Lynch, he bought it at 7. It went down, to $1. So on his position, he lost a ton, but he thought it was a good value at 7. He thought it was an even better value at 1. You
It's
won't
true.
always time the market. Okay, just saw another glitch.
That was on you. You're
Now I'm
glitching
wondering if
too.
the problem is just StreamYard.
It could be just StreamYard. So let's
Yeah.
just keep going. But you glitched that time, yeah. But to go on what you're saying, there is right. You have to buy
Okay.
when you think's the best time to buy, and hold on to it sometimes.
And the problem, a second problem with investing in the markets based on volatility is just stress. Volatility can be an emotional roller coaster for a lot of people. When your portfolio drops 10% in a week, have you been watching the news this past week? People are just,
I tell
about
my
to stroke.
I tell my friends it's like funny money, right? It's not real money until you cash it out. And if you invested it, say when the market was at 10 and it's 36 now, have you really lost anything? Other than the fake money until you cash it out?
It's on paper.
Correct. I always call it the funny money. But yeah, the funny money. Have you lost any of the funny money? No, because you haven't cashed it out, but you bought it at 10. Did you really lose money if it's at 36 now and it goes down to 25? Have you lost anything? Well, no, you haven't. So
No.
don't call me crying.
And it's tempting for some people to panic sell.
That's correct.
I've seen posts on X where people are going, just sold everything. Markets are done. Something along that lines. That's just volatility messing with your head.
That is correct.
And for new investors, it can be scary. Traders aren't immune. They have FOMO too. FOMO, FOMO. Fear of missing out. FOMO can push you into dumb trades, like chasing a meme stock at its peak or a meme coin. What was the girl, Haley?
Hawk-Tua? I
Haley
was going
something
to
had the Hawk-Tua coin.
Yeah, the Hawk-Tua. That's what I was going to say. Yeah.
It soared the first hour. Then after that, it just collapsed and it's dead. Almost everybody that invested in that lost everything.
Why would you invest
people
in
were chasing it because they were scared of missing out.
Is that why? I mean, why would they chase a brand new, not established crypto by somebody Hawk-Tua? Like, it didn't make sense to me.
Rule number 2. Stupid should hurt.
I used that at work last week. Just so you know. Somebody was being stupid.
I'm expecting my royalty check in the mail.
Hey, it's true. Stupid should hurt.
The more we insulate people from the consequences of their stupidity, the more stupid we as society get.
There was
Pain's a great educator.
There was a lot of
It's not a bad thing.
No, there was a lot of pain. So
the way it ought to be. That's how people learn. People and animals. You ever see a parent animal with a child? The child does something really bad. The mom beats the hell out of it.
I know.
I'm not advocating necessarily beating the hell out of your kids. That's a euphemism, but the punishment was clearly to get their attention and focus.
I'm a Gen Xer.
Anyway,
got it.
Oh yeah, I got my ass beat, and I don't mind a bit now.
My parents were more creative because we would be like, just spank us and get us over with. And they're like, oh, no. So my mom would give us book reports or you have to sit in a chair for like 2-3 hours. Like, you just lose your mind.
To me, it really depends on the kids. You've got some kids with a sweet and gentle spirit. You've got some that are just obstinate. But the whole idea of discipline is to bring them to a point of repentance or contrition. If you don't do that, if you just provoke them to anger, you've failed. And
They
in
could.
school. Hell, I had teachers pull us out in the hallway, and they had a paddle this long,
Oh, with the holes drilled into
and we'd
it.
grab our ankles. Yeah, and we'd grab our ankles right there in the hallway, and they'd get a couple free shots.
Oh, I got the
You
ruler
know
from
what?
the
We
nuns.
survived, and we never had the nuns, never had the ruler. But
Oh, they're sadistic.
the
I'm telling you.
main thing is nobody back in the day was beating up teachers or insulting them.
God forbid your
We
parents
kind of
got called
lost
down
that
to
in schools.
school for that. Yeah, I mean, that's what my parents said. God forbid if they call you from school when you did something, like you'll be dead. Like
Yeah.
it's different back then.
All right. Main thing, you've got to keep in mind is volatility does have risk, but they are manageable. Your strategy is simple. Just have patience and a cool head. Can you handle a little short-term pain? Yes, you can. Now, I get, asked a lot, how long does volatility last? How long is this craziness going to last? Great news is history gives us some insight. Now, this slide is also a volatility. It's a chart showing when VIX spiked from 1990 to now, which I guess I consider kind of the computer investing, algorithmic investing. So that's why I went back to 1990. As you can tell by the chart, it went above 30 in 1997, 1999, 2001. Shows it jumping up at the highest point during the subprime crisis. It reached over 80 at that point. And then in 2020, when you had the COVID crisis, it jumped. And you can see where we are now at 37 and change. So yes, it's high, but it's not uncharted land. It is relatively familiar territory if you have any background in the markets. And there were different type of events. Like back in '98, Russia's debt crisis sent the markets reeling. VIX hit 45. Volatility raged for about 4 months. This was due to a lot of the funds and long-term capital management all having highly leveraged positions. It wasn't the entire system, but it kind of impacted the entire system of stocks. Contrast that to the subprime crisis. That was a systemic issue in the economy affecting almost every bank, every financial institution, trading firm, etc. It was extremely widespread. Its impacts were felt extremely deep economically. That's a systemic problem. That's not just a temporary problem in the stock market. That lasted for about 18 months. COVID crushed markets in March of 20, pushing the VIX to 82. But it calmed to 20, its norm, by June, just 3 months later. So that gives us some clue. Is the issue going on in the market? Is it something majorly wrong in the economies of the world? Or is it just a temporary bump and panic in stocks? Bigger crises like 2008 will drag far longer. They're kind of the black swan events. Nobody saw them coming. something like COVID, kind of a temporary issue, it burn out faster. Now, with the VIX at 35, driven by uncertainty about the tariffs, the Fed, the overpriced stocks, the yen carry trade, the basis trade, China defending the yuan. Is that something fully systemic, or is that something, I guess I could refer to it maybe as more localized, something that will be resolved really quickly? Trump just announced this week.
I will tell you, Clay.
Yeah, China's a separate problem. I was saying earlier.
They play with their currency. Like when I was a product line controller, they would play with their currency where it would have a major impact on my P&L, but it didn't, if you know what I mean, because they were playing with the currency constantly, manipulating it, dropping it.
Yeah, you're breaking up too. Yeah.
Well, go ahead then. I'll just sit here and listen.
And that's why I'm going to talk about China That's why I'm going to talk about China Tuesday night, because there's a lot more to talk about that. I can't really do it justice tonight. So if you're curious about what all's going on with China, the impact on the markets, the impact on trade, etc., the impact on America's future, then tune in Tuesday night. We'll cover that in some detail. Oh, look, I got you a new kitten. Cute.
This is Jamie. Jamie came to visit, climbed up my leg, so she wanted to see what was going on. Jamie. Okay.
Is she only visiting, or is this a new addition?
No, my brother brought her over because she is actually 10 weeks old and the other siblings are huge. And he didn't want anything to happen to her because 3 of the other kittens, they were wildcats that showed up. So 3 of the other kittens passed. So he brought me a new pet. So her name's Jamie. That's what she named herself. And very smart, very funny. Like I said, she ran in the office to see what I'm doing up my leg. So she's the new baby in the family. So now I have 3 pets and an exchange student. Clay, it looks like you're frozen.
Am I back?
You're back.
Can you hear me?
I can hear you now.
I don't know.
It's definitely StreamYard.
I don't know what's going on. I don't know if it's StreamYard.
I think it's StreamYard. I don't think it was Ellen, because you keep freezing on me and delaying too. And I have a commercial line, so I don't have that problem.
You're breaking up a little bit on me too, so I do think it's StreamYard. Okay. Interesting. So, the markets, if we look at most of the issues now, like I was saying, Trump has already got, 100 countries, willing to negotiate. By willing to negotiate, I am thinking that they will be able to agree to terms relatively quickly because they know what he wants. He wants, some reciprocity in terms of the trade agreements. So I assume as soon as, whatever orderly process they can hold meetings, get the papers signed, that will, carry forward. And what he's going to end up with is basically a free trade or extremely low tariff trade with 100 of our largest trading partners. This will, in a lot of ways, exclude China, which would have some really fascinating consequences to it.
Good question.
So if I look at the current situation, I'm kind of thinking it's more just an event nature. It's not really systemic. Now, so that would make me think we're looking at 3 to maybe 6 months of choppy, volatile markets, looking at historical averages. Now, if trade talks absolutely implode, that bet's off. but just looking at history, what I know now, and obviously new info comes out all the time. And so this guess is subject to change. I hesitate making, any kind of predictions, but I've been asked a lot. And so I'm just trying to give my opinion, my thoughts. There's still a lot of chum on the water. Yes, ma'am.
Do you think he's purposely trying to isolate China so it forces industry back here to the U.S. and then kind of just leaves China? Okay, that's what I think too. He's just leaving China floating out there. They don't want to. Yeah. I think it's going to collapse their economy.
Yeah, I think that's what they're trying to do.
Medicine, because you realize there's only a 2-month supply that sits in the U.S. I think it's like 2 to 3 months supply. So if they cut off our medicine, that's a problem because they couldn't get production ramped up here fast enough on a lot of those meds unless we can get other countries to buy it from China and then sell it to us.
Yeah, that's a possibility. Second thing is China is already shuttering factories. And they talk about, fighting to the last man, and they will do it. But my understanding is there's already been one assassination attempt against Xi. He's replacing, several of his quote unquote trusted military leaders over the past 6 months. There are just, to me, a lot of signs of inner turmoil. And if the economy gets even worse, if there are more riots, more chaos in China, then, there's a chance he could be replaced. And, you look at who Trump hired for Secretary of Treasury. And I mentioned this the other night. The guy's got a fabulous history of destroying currencies. And he is currently working his magic on the yuan.
I believe that.
Yeah, with the economy collapsing, if they're able to get the yuan to collapse to break up 7.8 or 8 handle, their whole economy is trashed, absolutely trashed. They can't afford the debt that they have. They have tons of debt as well. They are highly leveraged as a nation, particularly at the city and the provincial level. They've got cities that are unable to pay employees. That's what's causing a lot of the unrest. They've just got huge amounts of debt. They can't really afford to take on any more, and nobody wants to lend to them. They're kind of becoming, with all of this, they're kind of becoming a piranha in the trade world, particularly if Trump signs agreements with 100 other countries. It'll be every major trading partner except China. He's also working to ease the relationship between Russia, which will pull Russia out of China's orbit.
Out of BRICS. I think BRICS is done.
Yeah, I don't know that BRICS is done, but it'll certainly soften the momentum there. And
if you pull Russia out, what do you got? China doesn't have the economy, right?
No, they don't. But Russia won't completely pull out of BRICS. They will just become warmer and start trade with the U.S. again because Putin wants Russia to prosper.
Correct.
And China doesn't offer that potential. What China offers is a defensive alliance. China's actually got troops now in Ukraine fighting and supplying weapons and ammo to Russia. Well, if we can end the Ukraine war, then there's almost no reason for Russia, if they want to have a bright future, to maintain a close alliance with China, because of China's economy is dying, and they only have more pain and more chaos ahead. So economically, it would be to a huge benefit for Russia to open up relations and trade again with the U.S.
So do you think Trump, in your crystal ball, wants to pull out of NATO and have Europe support Europe, and then that would ease tensions with Russia?
I don't think he's doing it because of Russia. He just feels like Europe has taken great advantage of us. We have spent tons of money over there, and then they have very high tariffs and VAT taxes on our products.
But what I'm saying is, we pull out of NATO, that's certainly, I think, going to ease tensions with Russia because it's NATO's infringement
Yeah, it definitely won't hurt, but I don't think that's the main incentive for him backing out of NATO.
No, I don't either, but I just think, would that ease tensions if we're out of NATO?
Yeah, you look at what's happening to a lot of the NATO countries. Germany, France, even the UK have become almost socialist and have done nothing to contribute to their own defense or to help pay for the U.S. cost in their defense over there. In addition, they've had a ton of immigrants, and immigrants that don't want to become German, don't want to become French, don't want to become British. They want to turn the country into the same culture that they came from. And so this is causing a lot of chaos and havoc. And Germany and UK are heavily, heavily committed to the green economy. I forget what they call it. It's not the New Deal, but the green economy, and they're killing their energy production. They are killing manufacturing. And so, if Germany ceases or keeps reducing its manufacturing, it's not a financial center. It doesn't have great real estate opportunity or values. It has no real future economically. As they, continue to force more and more companies out. Yeah. Europe is a dying economy overall. And that's one reason why they're having more and more troubles, bumping heads with the former Eastern Bloc countries who are really coming to resent the socialist in charge of the EU.
Oh, I think they're going to have a revolution over there. Because I was reading like 7 or 8 mayors now in the UK are Muslim now.
Yeah. And it's just a culture conflict because, the immigrants don't want to embrace traditional English values or culture. They reject it. Not only do they reject it, they want to destroy it. And they're not bashful about it. So how does all that end up getting resolved? It's not going to be peaceful one way or another. Whichever side wins, it's not going to be peaceful.
It just reminds me of like Sinn Féin starting again. When they were all starting that, you finally have peace there, but people are the divide. I mean, what is it? The one fighter who wants to run for president of Ireland.
McGregor?
Make Ireland again.
Yeah.
They're losing tourist dollars. People say that they don't want to go because they have that certain expectation of what they dream about, and it's not that anymore.
Yep. And what do they do to McGregor? They put him in jail.
Like Le Pen? Like what
like
they tried to do? It's lawfare.
And there's another one.
Wasn't he in Russia? The one in Russia?
I mean, Russia's always given political opponents hell, or poisoned them. But these are countries that we have thought of traditionally as democratic, or republics. Yeah, Europe is not.
I stopped going. It was getting very scary to go there. Yeah. I was in there in Europe when, in Germany, when Osama bin Laden was gone to that, the other side. And the embassy called and said shelter in place. I was also in Germany when the shots were fired outside of the Frankfurt airport, and I was in the Frankfurt airport. So that's another reason why I left working for an international company, just because for my own safety, traveling to Europe and just hostility towards Americans in general. I've seen when I was over there, the rise of the hostility in certain countries, right? A woman traveling alone on business isn't maybe the safest.
Yeah. And, the last time I was in, Paris and London was, 5 or 6 years ago, and enjoyed it. But, in Paris, walking the streets, you had people living all over the streets.
I know.
And, as I would walk by, they would say something and you could tell it was
Derogatory.
not terribly complimentary or courteous. And they've just turned into sewers, kind of like San Francisco. It's
don't
just,
get me started. That was my last place. I would go there, and they have an app if people defecate on the sidewalk, and we're having, and they just hit the app. I'm like, are you crazy? This is not normal. If you did that in my town, it wouldn't fly.
Yeah. The pendulum has just swung too far. But let me get back to volatility.
Yep.
So volatility in 2025, it's high. Probably is going to stick around a little longer. There's still, as I refer to it, chum on the water. For cautious investors, you've still got time to plan. You don't have to rush into anything blind. Those people trade more actively or are gaming short-term swings while eyeing a calmer 2026. Either way, volatility is temporary. It's not going to last forever. But it is a chance to, become a legend. So let's look at some investors who have taken opportunity of volatility, kind of heroes of volatility, I guess I could say. Start off with Warren Buffett in 2008. This was in the ultimate financial crisis, Armageddon of the financial industry. Banks failing, VIX was at 80, panic was everywhere. Most investors ran for the hills. But what did Buffett do? Well, he smelled opportunity. He dropped $5 billion on Goldman Sachs, buying their preferred stock. So he locked in a 10% dividend, and he received warrants to buy additional shares cheap. So in 2008, he spends $5 billion. By 2013, he pocketed billions in profits, plus a cool $1 billion annually in dividends at the peak. Now, the slide I'm showing is Goldman over, basically a 2-year period. But if you look here, he bought it this December. When he bought it, the price started going up. So he bought it at a little bit below 60 to somewhere around there. I forget the exact price. But
pretty low.
Within a year, the price had almost tripled to 180. Plus, he was getting a 10% dividend on his $5 billion. So, 50 million a year. I'm sorry, 500 million a year. Duh. Yeah, I missed a zero there. And as Goldman turned profitable, their dividends increased. So some years he received $1 billion a year in dividends from a $5 billion purchase. And the value of that purchase had tripled. The lesson: buy quality when others panic. If you look at just an average investor, which probably most of our audience is, I doubt Buffett's listening, but he might. For a hypothetical investor during COVID, with 10,000 in savings, well, when markets crashed in March, tech stocks like Zoom and Peloton got crushed. Shopify, Zoom fell to 100, Peloton to 20. A typical overreaction in high volatility markets. People will overreact. They will oversell stocks. Now, when you see this high volatility, you just want to ask yourself, what will be in high demand over the near term? March of 2020, lockdowns. People are starting to get locked down. Businesses are closing. So people are going to have to stay in their houses. So what are they going to do?
I'm
What are
sorry,
they
it popped in my head. Didn't Bill Ackerman make a shit ton during the COVID?
Oh, yeah. Because they were asking this question. What are people going to do in their house? They're going to watch movies. If they do business, they're going to have to do it over the internet, Zoom, and they're probably going to buy more home exercise equipment to try to burn some calories because they can't go to the gym. So, you know, Zoom went from $100 to $400. Peloton from $20 to $150.
Probably Lowe's. Didn't Lowe's
You,
go up?
Lowe's,
Home Depot.
Amazon, because people had to start buying more at home. But that's not a difficult thought. That's
No.
not a difficult thought process. You think something major is changing in the economy. Well, what does this mean? You know, what's the moral? One, a little bit of courage. Two, patience. Volatility can be scary, but it can hand you chances that other people miss. You know, here today, April of 2025, the markets are wobbling. Your Buffett moment is waiting. So, what's the playbook? You know, we've covered a little bit about volatility, what volatility is, its roots, its history. You know, we've looked at 2025's chaos, the ups and downs. We've talked about how long it's lasted. We talked about a few people, you know, Lynch, Buffett. I could talk about Druckenmiller. I could talk about Soros, Ackerman, who crushed it using volatility to their benefit. So what's the big key to taking advantage? Well, bottom line, stay cool. Keep your wits about you, whether you're new or whether you're a seasoned investor. I see seasoned investors losing their stuff when a position goes against them greatly. They'll just be absolutely miserable. That's not how you make volatility work for you. You keep calm, patience. I mean, even meditate. Think about the world around you. Think about what are the major influences and trends, not what they have been. What will they be? Is the world changing? COVID, the world changed. If you didn't understand that, then, I mean, that's just almost innate. For every reaction, you know, as an old chemist, for every reaction, there's an equal and opposite reaction. Good old thermo too. For every trend, there will be those who profit and those who lose. You know, this is the most important step, patience. The sooner you understand the consequences of ideas, policies, events around you, the better you can react. And it takes patience, it takes thought, it takes contemplation, meditation, whatever you want to call it. But you have to think about the world around you. And going forward, what are you going to do different? What's the average person going to do different? What are they going to buy different? Where are they going to spend their money differently? What opportunities are going to be different? What old opportunities won't be available? Now, there is a technique to use if you're a cautious investor, you know, cautious about volatility, and that's called dollar cost averaging. So instead of dumping your full $10,000 in a couple of stocks all at once, spread it out. Do $1,000 a month. You know, volatility's waves, and it's going to have waves up and down. It won't sink you doing $1,000 a month. If the market drops a lot, you'll buy low. You'll buy more shares than you will when it's high. So it averages to work to lower your cost over time, particularly in a falling market. In April, the dips we've seen make this perfect. You know, beginners, it's kind of like, you know, set it on auto pay. Do it automatically. Set it and forget it. Just, you know, invest in good companies. And keep in mind, every company has its peak. So if you buy Peloton at 20 and it goes up to 150, you got to be thinking, this isn't horrible. I don't know if it's going to go any higher, but I've done really well. There is no such thing as a bad gain. Remember, talked about you want to be piggish. So you want to invest in a few good companies. But pigs can still get slaughtered. If it's at 150 and you think it's going up forever, it's going to continue growing like this forever. It's not. No stock does. So don't be afraid to take a gain. You might miss some upside, but you've done well. And you have opportunity to buy something else that's a better value, or to hold your profits, more importantly. Stay long term. It's like driving. Do what?
So what about companies that are trying to bring manufacturing back, like US Intel, Taiwan Semiconductor? I think Apple wants to bring things back, right? Well, Tesla's US. I guess a lot of semiconductors now are coming back or are in the US. Is that something that in your crystal ball that you foresee being something worth investing in as they start bringing manufacturing back, or companies are incentivized to bring it back?
It's not so much the bringing things back. I look at things and go, what will the future be, and what's a good value now? I look at something like the most hated company, Tesla. I kind of dig it when everybody hates a good company. Now, Tesla, people think Tesla, they just think of the car. What they don't realize is a year, 2 years from now, Tesla, the smallest component of their product line will be cars. They will be selling robots out the wazoo in a year, 2 years. Robots. How would you like to have a built-in maid to handle your cleaning, do your cooking? No, I'm just talking about the average, or upper end investor. It'll be a status symbol. It'll be trendy as hell. If you have repetitive tasks, you have to do it over and over.
I think their battery market might go up too.
Would you want a robot?
No.
Yeah, they're estimating that they will sell 10 million a year.
Well, their robots or their power?
The robots. I hadn't even talked about the power yet. The robots.
Okay, we got to watch Terminator. Put Terminator on the movie list. I'm just saying.
But there's a lot of people that think it'll be cool. And there's a lot of repetitive applications that they could do extremely well and far cheaper. You mentioned their battery.
Their battery, their supercomputer.
I think electrical cars and appliances and lights and all have a bright future. Our problem right now is the battery technology is not that good. It's risky. Particularly if it's a lithium-based battery, they can overheat and catch fire, and they go from, if they start warming up, they 120, 150, I forget where they start the process, but, you can be holding them 1 minute, the next minute they're at 1,400 degrees, and you can't put it out with water.
Oh, yeah. Did you see during the hurricane Helene, where they were on fire and underwater and still on fire?
Still burning, yeah. I've seen people try to pull a boat out with them, and the boat or they forget their parking brake or something, and they're pulled into the water. They're submerged and still burning. 100% submerged, still
Yes.
burning under the
I
water.
saw the video. It was like terrifying.
So that's a big risk. They're close to having some new breakthrough technologies. I don't know whether it's graphene or some other basis. Graphene seems to offer a lot of potential for being able to hold a bigger charge, being a whole lot cheaper, and have absolutely no risk as far as being toxic waste when it dies or starting fires, overheating. So you've got more power, it lasts longer, and it's cheaper. That's when you'll see the demand for more electrical appliances, vehicles, lights, etc., really come into vogue. So batteries are a huge potential future for Tesla as well.
Oh yeah. But now, did you know that Tesla offers auto insurance, real-time auto insurance? I know someone that bought a Tesla, and they can get real-time insurance, and it rates it on how you're driving your car. It
that's funny
because it sends. It's not all states; it's only certain states that they do it. But that's another thing of diversification when you're talking about.
Did not know that. Yeah.
Yeah. So they give you a safety score. So you have to basically let the Tesla drive it, and you'll get the best rates. So hands off and let the car drive you. You'll get the best rates.
They are also about to produce a robo-taxi.
Oh.
Which will probably be a big seller, particularly in big cities with a lot of traffic. There's a lot of people who would love to have a chauffeur or limo, but don't really want the very high expense. But a robo-taxi, a Tesla they could afford, and they could get in and be working, reading the news, getting caught up on whatever they want to do during their hour commute. And the car handles all the driving and parking and picks you up whenever you're ready. That'll have some potential. So, when I look at a company like Tesla, I'm looking at what's the future going to be a year, 2 years from now? And I think it's multiples higher than the stock is now. So Tesla to me is getting kind of attractive. That's something that I would, strongly consider here, particularly if it drops some more down to 80. And it has nothing to do with, Elon's politics. People get mad and don't want to buy the car. But in a year, that'll be forgotten. And if they're producing a better product, Tesla's the number one selling car in China.
That's interesting.
Now, the Chinese have some, kind of cute little ideas and designs with their cars. But in terms of reliability and danger, I saw a video where a Tesla in China rear-ended 2 Chinese electric EVs. Tesla had a caved-in hood. The 2 Chinese cars were on fire, just melting down. And that apparently is a big risk with the Chinese cars because they don't have the same battery safety standards that we do. So which one would you want to buy?
Melissa asked, but will they any of them be named Rosie? I think you can name the robot whatever you want, Melissa.
You could, yes. When you buy one, you can name it whatever you want. I'd forgotten about Rosie. That's for those of you that don't remember, there was a great cartoon series called The Jetsons. I don't know why, but I loved it. And it was futuristic. They had like flying cars and all, but the family had a robotic maid named Rosie. And I had forgotten that till Melissa mentioned it. She always had a little apron and a feather duster. It was just a big chunk of metal, nothing humanoid, just a big chunk of metal, square body with arms, and I guess she had legs and like a square head, but yeah.
Well, probably what the Jetsons was 2060 or something that it was supposed to be taking place. So maybe we will have Rosie by 2060 when the Jetsons took
I
place.
think we'll have Rosie in the next 2 years, 3 years. Not that everybody will buy one, but she will be available.
Mm-hmm.
And in fact, if I was Tesla, I'd be damned if I wouldn't name the line Rosie.
Wouldn't they get copyright though?
I'd buy it, or doesn't copyright have a
I don't know. I'm just asking.
lifetime?
I don't know who owns it as to whether, yeah.
Yeah, but that's funny.
I do think though that the power and then their supercomputer, because didn't they have their own zip code now for their?
Yeah, they're probably the leading company on AI, or one of the top two.
Right.
They have just got so many different things going on. And Elon, love him or hate him, he's a weird dude, but love him or hate him, he makes money. He comes up with ideas.
He's
SpaceX.
He can't see the world like we do.
No. And he's willing to work to change it. Interesting guy. But
I'd love to meet him. I tried to meet him when at my last company, Tesla was next door, and I went over and I knocked on the door and said, I'd like to take Elon Musk to lunch. I did get a nice reply from his admin that he wasn't there in California. And I was like, well, I work right next door. So if I'm ever back, let me know. The people in the office thought that's hilarious. I'm like, what? I told you, you never know. Elon does stuff like that, right? You never know. He might have come down and let me
once in a while it works out. Yeah.
Right? You never, like I tell people, nothing gained, nothing lost, right? He wasn't there. They were super nice. I got a letter from his admin that, Elon wouldn't be around, but, I figured I'd take a chance, right? Maybe I could have took him to lunch, but he wasn't there when I was over there. You never know. Maybe someday.
There's still time.
Elon, if you're watching, I will still pay and take you out to lunch. I'll meet you halfway.
Yeah, you let me know if that comes about. I'm crashing that party.
All right, I'll let you know. You can come up.
All right, so just in closing, stay calm. Volatility tempts people to panic or FOMO, fear of missing out, to, dump stocks they shouldn't, do things that they shouldn't. So, value information. Check X or any other news site. I really consider X now more of a news site than most others. Not that it's all accurate, but you're getting all sorts of different opinions, perspectives, ideas. So it's a kind of a valuable information source to me. But don't let other people's emotions push you into rash moves. Your playbook is your anchor. Patience. You start with a knowledge that volatility gives you opportunities. You develop a love for having opportunities. It feeds you. You just have to realize that volatility is a consistent source of opportunities, and then hunt them out. You should be greedy when others are fearful. So, anybody have any questions? I see Melissa says that very well may be an IP issue. Who was it? Somebody was saying eliminate all IP laws or restrictions. And Elon retweeted it and said, I agree. And this is a guy who has billions in IP value in his companies. And so I thought that was a rather, of course, Elon's already a billionaire. Adding more digits to the end of that won't change his life in one whit. hell, he lives in a little house or out of his car. Melissa,
Hey, I'm all for the tiny house if he can
yeah,
relish the tiny house. I don't know about where he puts all the kids though. Is he 18 kids now?
yeah. This latest girl that claimed to have fathered a child by him, I just saw where he paid her $2 million up front and $20,000 a month.
Him and Jack Ma believe that there's population collapse, so
Yeah, well, he's doing his part.
hey, as long as he can afford to feed them and clothe them and all
At
the power
$20,000 a month, I think he's doing that.
for all of them.
Well, I mean, I don't know what he's paying the others, but this one. So anyway, volatility. Anybody have any other questions, comments, suggestions, ideas?
I don't see any.
We're at the closing time. So I want to thank you all for joining us tonight. Jane, thank you very much for jumping in and filling in for Etrain.
No problem.
She's struggling.
I do think it wasn't her this time though, because if all of us are having issues, it was probably not her.
Yeah. It seems like things are a little bit better now, but that also could be because StreamYard has fewer people making demands on it.
I agree.
StreamYard might have had some sort of bandwidth issue.
That's probably why I couldn't log in.
Yeah, that'd be my guess offhand. But if you will, hit the like, subscribe buttons. If you're not subscribed, I do appreciate all of you for watching. Appreciate your time. Hope it was, valuable to you in some ways. If you've got any questions, email me, moffatonmoney@gmail.com, or DM me on X, moffatonmoney. And we'll talk more about China and the implications of what's going on with some of the stuff behind the scenes. And I think you'll find that interesting. So look forward to seeing you Sunday night. Hope y'all have a great rest of the weekend. Jane, thank you once again.
Sunday night or Tuesday night?
Tuesday night. Tuesday night. Did I say Sunday?
You did. That's okay. That's why I was like, wait, he's doing a special show.
Yeah.
Better to clarify.
No, yeah, if you've got some questions, Tuesday night is usually the night, but I will have kind of an extended presentation particularly on what's going on with China. So thank you all. Y'all go have a great weekend, and we'll look forward to seeing you Tuesday night. Blessings to you. Good night. Our time is up. We thank you for yours.